So we are recording. Let's get started with episode 4 of the community video conference, where we're going to talk about the stock market and try to see what kind of trends we're seeing that maybe reveal some good investing ideas. That's going to be the goal of this call. I'm open to any topic that anybody wants to talk about relating to stocks, investments, and so forth. Feel free to bring it up. Please ask questions. Put your thoughts out there as we go through these through this talk track. But we can get started by looking at just high level stock market, and then we'll get into sectors and industries and maybe talk about some industries that I think are worth taking a look at as a potential investment for the remainder of 2024. So the S&P is still tracking for a real nice gain of 12.68% year to date. And what's positive about the current state is, if you guys have been watching my videos, so during this period of time, I was uncomfortable that the market just kept going up. It's like, okay, markets just don't, this is uncomfortable. It's like, it's too good. I'm getting nervous that if we keep going up and up, we're going to have a pretty significant crash. That's how bubbles are formed. Now, nobody can predict when it's going to go down. Nobody can, accurately say, oh, it's going to go down on this particular week and so forth. But the medicine, I call it medicine, that the market took over the last month has been very productive. For the S&P starting on July 16th, for the NASDAQ starting on July 10th. So the NASDAQ's clearly in a 30-day period of time when it went down. This is really good for the market. And specifically, some industries went down far faster than others, right? And some industries actually rallied the last 30 days. So we'll take a look at that in a minute. When we look at the 4 different indexes that I'm going to look at, which is the S&P, NASDAQ, Dow, Russell, we have the NASDAQ still leading year to date. If you look at performance, the S&P in second place, the Dow is actually in the negative year to date. And then the Russell is barely making a return. Now, the Russell did have a good 30 days. Let's take a look at the 30-day. But still, it's in the negative, but not as bad as the NASDAQ, the S&P. The Dow did have a positive 30 days, but I don't think anybody's, cheering about a 0.48% return. In general, it's a period of time where the markets did have it was a correction for the NASDAQ officially. The S&P got near a correction. Correction is when you get to 10% drop. S&P got to 8.5% drop. So those things are, I think, make me feel like, okay, that's a good drop. There's probably more buying opportunities, and the market's probably closer to fair price. I thought it was priced at a premium, but you don't make money by just observing the market as a whole. You make money by buying stocks at the right time. Now, looking at the market, this is the S&P. I wanted to compare it to the 50-day moving average and the 200-day. And we certainly dropped below the 50-day moving average. Okay. And if we look at last year, we had a good correction last year, and it dropped below the 50-day and the 200-day moving average. But this particular drop, the market had gone up so much that it has pulled up the 50-day and the 200-day. So we did not cross the 200-day moving average. So it wasn't a severe correction for sure on the S&P. It was just like a good medicine dose and bring down some stock prices. When we look at sectors, the last month, real estate did the best. Utilities have been doing well, and they tend to do well when recession's coming. But in this case here, utilities have been doing well because of the whole data center build out that's related to AI. And then healthcare, did well. I'm bullish on healthcare. Staples did okay. Industrials, industrials, it's kind of a mixed bag. Some industrials are going to do well. Those that are really dependent on a growing economy may not do as well as we would like. Some spots of financials are going to do well with lower interest rates, but kind of like where the correction happened most was in technology, where semiconductor stocks, computer hardware companies went down substantially. And then some consumer discretionary, as the consumer becomes more choosy on discretionary spend like travel or high-end purchases. And you think about that space, right? Like my lovely wife, she has a nice purse and she bought it and it's nice. Well, that's a discretionary item. How many purses does she need? She doesn't need 50. She doesn't need 5. She just needs a couple of them, right? She has one principal one, and she has one that's smaller that when we maybe go somewhere where she wants a smaller purse, she takes that one. But discretionary spend means that you buy it once in a while, and then you don't need to buy that item again. With regard to travel, I think a lot of people exercise that really desire to travel and are probably just pumping the brakes a little bit. Go for it, Scott.
Hey, thanks. Yeah, quick question. Would you consider cars discretionary purchase? I mean, maybe it depends. Like where I live, it's definitely discretionary. I don't have one right now, but
yes, I would consider a new car discretionary because you can make your old car work, right? Like back in my young days, I would have a car that was super old and just functioning. Well, if I decided, hey, I'm going to go and spend tens of thousands of dollars on a new car, that's totally discretionary. Yeah.
Okay, that was it. Thanks.
Yeah. So, and I know, Kiter, you had a comment around Prudential. Is that correct? You had I invested in Prudential, and I admit I do not totally understand their business. I know you hold it, so other investor I will follow. Pullbacks opportunity. Okay. Yeah. So I think Prudential is in a good spot. Let's take a look at Prudential real quick. And I'm going to finish my thought here, and then we're going to jump into Prudential. So Prudential is part of financial services. They're an insurance company. And within this sector here, it's probably not going to come up with Prudential, but nope, not there either. So Prudential's kind of a conglomerate of financial services products. They're probably known best for their life insurance business. And they also do annuities, and they do certain products that individuals and institutions like them to have. Now, I need to update my stock price on Prudential before I could give you a full review of Prudential. So $109.46. Over the last 30 days, it's pulled back 8%. Year to date, it's up 5%. 1 year, 14%. Pays a nice dividend of 4.75. So one thing that Prudential has going for it is it produces a lot of free cash flow. When you look at their cash flow, it continues to expand, and the insurance industry, there's a reason why like Warren Buffett loves insurance companies is you sell policies and you sell them at a policy rate. Your policyholder pays you in advance. You have actuarians that are trying to calculate, hey, for that type of insurance product, this is what we want to price it at. This is where we want to sell it. Therefore, our payouts will only be 80%, 90% of what we're selling the policies for. So you're somewhat mathematically expecting to make money on the policy, and better yet, you get to take that cash and invest it and make money on it. With the higher interest rates, they were certainly making a very good return. As interest rates come down, I think it's going to erode some of that profit, but it's still a pretty good dividend environment. It's not like we're going back to, the days when interest rates were near zero. So it's still going to be a decent area. I had Prudential discounted very, very well. And as we look at, the path forward for Prudential, I don't see anything being a threat to the company where, well, as we have declining interest rates, what will that do to Prudential? Well, I think it's going to be okay because it's not going to be a zero interest rate environment. So they're still going to make that cash. I think insurance continues to be and have good, strong demand because people want to insure their life. They want to buy into annuities because they're intimidated by investing in, stocks or bonds directly. They just want somebody to tell them, hey, you buy into this either life insurance policy or this annuity, and then you'll get this type of cash flow in the future. People can get their heads around that. So those products, and I think the basket of products that they have, are going to put this company in a good place. So I think Prudential is a good stock, and they pay that really nice dividend. So as we head into an environment where you have some of this volatility, right, and maybe showing it with the S&P, you have this volatility. And if we go back to the times of 2022, right, the S&P in 2022 went down, 24, and actually went down about 25%. This chart's not showing it, but when you have this type of environment where you have a market that's correcting or even crashing, those dividends really mean something, because a 4.75% dividend is going to really show up if you have down markets. Now, I don't think we're going to have this type of correction this year, but I don't know that we're going to have, great appreciation for the rest of 2024 and 2025. I'm not sure just yet, but from here, if we went up 2%, that'd be great. If we went up 5%, I think that would be really, really great. If we went down 2%, I wouldn't be surprised. If we went down 5%, I wouldn't be completely surprised. I'd be disappointed. But I think having a dividend paying stock, I think dividend paying stocks are a good idea, especially if you're an older investor like myself, because they almost assure you that you're going to have a rate of return in a mixed market that's going down, up, down, up. I mean, it's hard to be a stock picker at times, but when you have that dividend, it really shows up. I like looking at my dividends and interest I measure my performance every month. And when I make $6,000 in dividend and interest, I'm like, great. Well, this month, August, is looking pretty bad because we've had so many down days, but those dividends really, really show up. So I think Prudential is a pretty solid stock, and insurance companies are a pretty good play for the remainder of 2024. Coming back to what other types of investments are going to work. So we have real estate has done well for the last 30 days, but I would caution you that I want to make money every year for a long time, and I want to each year get better and make more money over a long period of time. Real estate doesn't have a great track record of having just expansive appreciation. If you look at real estate, right, it's having a good month, it's having a decent year, but over the 5 year, it only has a rate of return of 19%. Whereas healthcare has a rate of return of 162%. And that's with a couple of down years overall in the healthcare space. You have technology with 546% rate of return, consumer discretionary and consumer services being a higher rate of return. So it's almost like, it's important to keep near-term objectives kind of clear. Like, hey, I'd like to buy into this, but my exit strategy is going to be this or that. For example, if we go into a recession, it would be a good idea to buy into some safe stocks, but make sure you define your exit strategy. I'm going to get into this stock and I'm going to track the recession. when I see that the economy is going to grow, I'm going to get out of that stock and start getting a better position into growth. Okay. I'm going to rotate out of this into that. The mentality, and I know that in principle, like Warren Buffett is an example, or even Charlie Munger, they would say, you buy and try to hold forever. Totally get that. If you buy at the right time and you have a company that just has great growth over time, why would you ever sell? Acknowledged. But there will be some investments where you're like, hey, you know what? It's going to be an investment with this type of horizon. Bonds are a really good example. I buy a bond. It may have a 1-year term, 2 years, 3 years, 4 years. It has already predefined exit strategy. In 2 years, the company that issued out that corporate bond is going to return the face value of that bond to me. Exit strategy has been defined. Stocks is harder because it's really on you. You need to decide at what point in time, what would I need to be seen in the market in order to get out of that stock? So those are the things to think about. Is if you're going into real estate or utilities, I would encourage you to define that exit strategy. Like, okay, I'm getting into real estate because I think it's a good time to be in there. It serves this purpose in my portfolio. It's going to generate income. It's going to do this and that. And these are the conditions that if they existed, I would get out of that stock. Healthcare, I think, is a fertile market. I think healthcare has the ability to sustain recessions, right? You're going to go to the doctor whether the economy is good or bad. It's not a discretionary spend. It's oh no, I have this illness. I have to go get treated. Then I have to buy the pharmaceuticals that they recommend. I have to take care of myself, maybe buy some healthcare related devices that are going to help me with this condition should one get ill. So healthcare, I think, is a place where I continue to buy into. I think it's somewhat early in what I think is going to be a good trend in healthcare. So I'm going to keep investing in companies that are healthcare related. Eli Lilly's just been a phenomenal success. And I did not understand how powerful the weight loss drug was going to be. And I kind of missed that stock. But whoever was in that stock, man, congratulations. That was a big winner. All right. And Kiter, Airbnb. So let's talk about Airbnb. So let me finish my thought here, and then we talk about Airbnb. So industrials, industrials, I think, could tell us a lot about the economy. And let me make a point there. So when we go to industrials, and again, I was watching another YouTuber and they were talking about this, and I go, hey, that's really good insight. So when you look at industrials, it's got a long list of industries. You see them over here, from railroads to airlines to equipment, accessories, waste management. Okay. Now, to me, the companies that have that do better when you have a growing economy are companies like freight companies, integrated freight and logistics. Why is that? Well, if a company starts selling more product, they start using more freight companies. Like, hey, I got more orders from my customers. I need you to ship it over to their facilities. Awesome. So these freight companies are kind of telling us what's going on with the economy. It's down 3%. Infrastructure operations, marine shipping is down 6%. Airports down, airlines down. So the traveler, what the airline business is really suffering from is excess competition. Ticket prices for airline tickets are down. And that's a sign that the traveler doesn't want to spend as much more traveling. Now, on the other side of that, when we look at industrials, metal fabrication, aerospace and defense, aerospace and defense is a little bit of like healthcare. No matter what, we're going to spend on defense, right? So you could really learn a lot from the industrial sector, and it tells you about the economy. I think it's a good sector to kind of get to know, because there's such a variety of stocks. I own 3M as an example, and I picked it up at the right time. I also own, believe it or not, Uber is an industrial stock because they move people and they deliver food. It's an industrial stock, which is kind of a surprise, but that's where it's at. Now, you asked about Airbnb, so let's talk about Airbnb. So, as mentioned, I bought properties, and a few of the properties, two of them, I decided in 2010, actually 2012, to rent on a short-term basis, rent them to travelers. And these properties were located in Southern California in a mountain resort area by the name of Big Bear Lake. And the results were really, really successful. The properties cash flowed better than the properties we had on long-term rental agreements. They cash flowed 3 to 4 times higher. Like, you could rent, we rent units here in Southern California, Orange County, which is probably more expensive to live in than the rest of the country. And I'm renewing a lease on one tenant. It's $2,000 for a 1-bedroom unit. The same property up in Big Bear Lake, probably similar in capital outlay at the beginning, would do $5,000 to $6,000 a month in cash flow. So it's just, the returns were just so much better. And the number one driver of rentals for short term was Airbnb. The second place, company was probably, it'd be between Booking or VRBO or Flipkey, and they were playing for the remaining 15%. Airbnb took 85% of our rental days. And they were just dominant. And that was not like, I wasn't the only one observing that. I was a member of other communities that did short-term stays. Airbnb was dominant. When we had the recession, because we did have a recession, really around the 2008, 2009, 2010 timeframe. And I invested big in real estate in 2010. That at that time, real estate was really discounted. And I bought 5 properties and I did well with them. But you heard stories about Airbnb, how people that owned their own property and lost their job started renting rooms on Airbnb, and they were able to generate enough cash flow where they were able to pay their mortgage, even have a profit, and they really felt that going on Airbnb helped them save their property. They didn't have to go into foreclosure, and these were really positive stories. Now, where I'm going to is, if we have a recession, I actually believe Airbnb has a better business model than a Hilton, Marriott, hotel kind of hospitality kind of establishments, because of that story I just told you. There's micro entrepreneurs all over the world that say, hey, like, I was in Mexico City and I stayed in a neighborhood where Hernan Cortez, the guy who conquered the Aztecs, stayed in. And this neighborhood's like hundreds of years old. And I stayed in an Airbnb, and they have like a property there. They have like 3 or 4 dwellings, and the people were on Airbnb, and they were telling me how great Airbnb was because they were able to cash flow far better. And these are like really humble, just wonderful people. We stayed in 2 units because collectively we stayed during COVID, right? When you can work anywhere. We stayed in Mexico City for a long time, and the families had been handed down these properties, like 4 generations ahead of them were the original builders of the property, and it was handed down to them. And these folks were all in on Airbnb. They just thought that this was like a new way to monetize their property. They had a good active relationship with the travelers that were coming into their properties. They were able to create more experiences. Like we stayed in one property, Mexico City. We wanted to go to the pyramids that are outside of Mexico City. The actual host said, "Hey, I'll take you and I'll charge you X." And I think I paid him, I forgot how much, but it was a reasonable rate. I knew who he was. Bingo. There's an experience, and Airbnb is getting into those experiences. So the long and the short of it is that Airbnb has somewhat disrupted and kind of broken the guardrails from travel and also rentals, right? Because historically, like if you're in a small town, and I'm going to use a small town in the United States, and let's say you're in Bishop, California. Bishop, California is outside of Mammoth, California. It's a small town. There's like 5,000 people that live there. And I know that town because I've traveled through it, and they have this wonderful bakery. It's a Danish bakery. And that place has 0 hotels. They have a couple motels, but it's really hard. Like if they have any kind of event, how can you find a place to rent? Well, Airbnb immediately makes Bishop, California more, the ability to travel to that town and stay there has just increased because now you have those properties on Airbnb. Overall, I think Airbnb is going to be worth, 5 times their current stock price over the next 5 to 10 years. This because their universe and their addressable market continues to expand. And you look at their addressable market, it's every owner of a property on earth that wants to put a room or a spare unit, a spare dwelling, a home, a vacation home on Airbnb. They're opening up properties as big and luxurious as like the Ferrari Museum will let you stay in a room where you have F1 cars in the room, and it's like $5,000 a night. So I don't know who would rent it. I wouldn't. And you have as simple as you can, stay in a spare room, in some small town for very little money. So I think Airbnb really has a great future. And I've been buying big into Airbnb since their stock price has been really sold off 25% over the last 5 years. Look at this stock here. So the market as a whole, I shared with you how I have some insight on the short-term rental industry. I operated 2 properties successfully, understand the economics of short-term rentals. That's the kind of information advantage that I like using in investments. When I have an information advantage and the market doesn't, the market in general is just looking at it saying, oh, travel is going to slow down, sell off Airbnb. That's a natural conclusion that the market can make. Well, what I'm seeing is a big discount on a company that's going to be worth a lot more in the future. So I will continue to buy shares. I own a lot of Airbnb. Airbnb is a discretionary, consumer discretionary stock. I've invested $86,000 in the stock. I only have a 2%, appreciation on it. At one point, I was at like 50, 60%, but the market's really sold off. I continue to buy the stock because I think it's 59% discounted, and it'll continue to be a big bet for me because I do feel that Airbnb has more than just a travel site. They have an economy that they've created of home sharing around the world. Their biggest growth markets are Asia and Latin America. So those are just great growth areas because like we visited Mexico and we want to get back to Mexico and go to a place called Merida, which has different types of pyramids, and it's safe, and it has all this natural things that we want to go visit. And then we want to go to, of course, Peru and go to Machu Picchu, and we want to go to Colombia, and we want to go to Chile. So there's a lot of places in Latin America that we want to go to. The Airbnb brand we're very comfortable with. So when we go down there, we're going to use Airbnb. And I want to go to Asia. I've never been. I want to go to Japan and Thailand and China and all these awesome places to visit on Earth. So I think we have a question from Scott.
Hey, actually, I have to run, but I just wanted to say thank you as always. It's always great analysis. I mean, you've clearly been working your butt off this last week, so thanks. Keep it up. And
I appreciate you saying that.
I definitely look forward to the dedicated real estate episode. I think I am chomping at the bit to ask some stuff, but I can wait.
Okay. Well, we'll see when we can mix that in. And,
I'll give you a hint.
Try to do it.
I mean, you know my situation. I think globally, so that's my perspective. But yeah, see you next time. Thank you.
Thanks, Scott. Take care. All right, so we went over Airbnb. Let's talk about Tesla, because we have Danielle who has been really looking at Tesla. And Tesla, in a way, I'm a fan of Tesla. I think it's cool that they made EVs work. And if you look at the return that was achieved coming out of 2019 and looking at their height, this is what made Elon Musk the richest guy in the world. But it's a car company, and car companies are just not that desirable. When we go over my desirability quadrant, right, which is this guy, they're not very desirable. When we look at Tesla, it's a car company. I put them like in the gray, because they're just, you got to compete against Mercedes-Benz. They've been around for 100 years. Toyota, they've been around forever, and they're excellent. Toyota cars are great. You have Ford here in the US, and then you have China that's beginning to manufacture electric vehicles. China's going to come out with cars. They're selling them in Latin America. And like when you buy a Tesla here in the United States, you're spending upwards of $40,000. And China's coming out with cars that are arguably close to as good as a Tesla, and they can sell them for $10,000. So that's the competition that Tesla has ahead of it. Don't know how they're going to operate around that. So Tesla's working, and it's my observation, I could be wrong, but Tesla's working to try to have political influence in the US, so that they put some big tariffs on EVs that are coming from China, which is good for Tesla, but bad for the consumer, because who wouldn't want to buy a $10,000 reliable EV here in the United States? I know I would, and they're buying them down in Mexico. So people are going to quickly realize, wait, why the heck are we paying $40,000 for an EV when we can be paying $10,000 for a Chinese one, and China's coming on strong? So that's the biggest threat to Tesla. And as you look at their revenue, the revenue has been in the red for one quarter. It's really slow, but their stock is priced as a growth stock. Well, this isn't growth. This is like for the trailing 12 months, 1.37% growth. They've been having to cut their prices on their cars because of that competition. That's why I kind of try to think this way. I want companies in the green. They don't have competition. They don't have people, companies joining that industry and competing on price and bringing down profit and getting rid of cash flow. Tesla is clearly here. With China coming into the market, they may end up being kind of undesirable really fast, because if they're making a $40,000 car that is being sold by $10,000 by a competitor, it makes it very hard to make a lot of money, because the consumer, especially around such a big purchase, is going to be smart enough to say, hey, I'd rather buy the other car that's going to be less expensive by a big margin. Their cash flow isn't very good. $1.7 billion of free cash flow on the trailing 12 months. See how all that competition is really eroding their cash flow. They had a high point in 22, but that's when other car companies had supply chain issues. They didn't have as many issues. And ever since then, the company's just been on a spiral. So their cash flow's going down substantially. It's a $200 stock. I think the company, and I'll give you my updated analysis there. So I think Tesla's priced at a premium of 81%. That's a huge premium. And I'm being very, very generous on their cash flow. I showed you that their trailing 12 months of cash flow is 1.7 billion. I'm giving them 2023 numbers plus some growth rate. It's just, I don't see how this company is going to ever line up with their valuation. And the competition keeps getting worse and worse for Tesla. Now they come out, they have a what I consider is a celebrity CEO. Celebrity CEO that when he talks, boy, the stock just takes off. But one of the stories he's told is, oh, we're going to do autonomous driving, self-driving cars. Now, there's another company that's way ahead of them, and that's Alphabet Google. That's a very formidable opponent. And they've been trying to get autonomous cars. They successfully have done so in major cities, but it hasn't gone up to scale where they're doing it nationwide. It's been a very big investment for Alphabet, and they've had to deal with, working with governments and so forth. And I think Tesla has a lot of work ahead of them if they want to be in that market. So we'll see if it's not going to be quick. Like they're going to do it next year. They could say we're going to start and then be done in 5 to 10 years, which investors are not going to wait that long to see the result on that type of business. So overall, this is where I stand on Tesla. It's a stock that, depending on where we're at, I might short, but be careful with stocks like these because they have a rock star celebrity CEO that when he speaks, the stock rallies. They had a rally recently of 45%, but then the stock's been tanking. It was down 17% very quickly. So, I'm sorry, I'm looking at the wrong stock. Not sure why I was looking at that one. I think it's worse here. So 1 year. So here's where Elon Musk, started to tell stories about how great the future is. It went up 45%, and then it dropped. Probably around the time when Danielle started publishing his thesis on shorting Tesla. I don't know if you've tracked that, Danielle, of like when you started to write that, what was the stock price? But it's dropped 27% very quickly, which is amazing. Danielle, you have a question?
Thanks, Victor, for going through the Tesla. As from my perspective, let's just give my perspective on the stock and how I trade. Usually, I hold my trade for 2-3 months, and I'm like a swing trader. Uh, Looking at the stock, I have some questions about like their FSD because they are very big on it, and they say they are data company. They have this thing called robotaxi, and also you said that they have like a celebrity CEO. In some perspective, doesn't it favor them? Because if you have a celebrity CEO, that means that you have a great space for marketing because he has a platform, and then he has a lot of followers, and then a lot of the followers believe in him. Then at some point it just favors you. So what do you think about like the robotaxi, their FSP, and also they have this project called the humanoid robot, and they say they will be very productive in the future. So does this make the stock uh, a buy like for the future in like 5 to 6 years of time. So what do you think about that?
Yeah, thank you. Let's get into that. So I think you had like 3 or 4 parts to the question, which is a good one. So first, you have a celebrity CEO, and you're right that a celebrity CEO could get more attention to the company, and I would acknowledge that's favorable. But as I read books and I read up on Warren Buffett does not make the management team a part of his investing criteria because he believes that a good business is a good business. It doesn't matter which management team is running it. I'll give you an example. If you have YouTube, everybody's on YouTube right now, is owned by Google, Alphabet. These businesses, it doesn't matter who the CEO is. They generate so much money from advertising primarily, and they generate so much free cash flow. It's a valuable business. If the CEO of Alphabet had a reason to leave the company and they were replaced by somebody else, a professional CEO, Alphabet would be fine. If Tesla is, now let's look at the business. I talked about the car business, the automotive business, right? And I said that it was 81% priced at a premium. If they lose their celebrity CEO, the company's going to collapse. And we're not buying stock in Elon Musk Incorporated, we're buying it in Tesla. And that's where, I do not value a company based on a personality, a CEO. So that's one piece, right? Is I don't value Tesla based on the fact that Elon Musk is a celebrity. Looking at their self-driving cars, their robotaxi. This is the company that Alphabet owns. And these are real life cars. They're in Los Angeles. I haven't taken a ride on one, but I've been driving and they're next to me. It's pretty impressive. They've been working on this for more than 10 years. So Elon Musk can say it every day, but you got to show me your Tesla cars that are driving the streets of Los Angeles, New York, Atlanta, because you're not going to get there until you really get your cars in the field like this. And FYI, they've been having these self-driving cars. They started in Phoenix and they started like 10 years ago, and they've been refining it and making it better and making it better. And also the data set that's important is they've been very safe. Okay. So it's one thing to say it like a celebrity CEO says it and the market reacts. Oh, it's going to be a robo-taxi business. Well, this business is really difficult to set up. You think governments are going to be like, oh yeah, you're Tesla, no problem. You're going to have cars driving our streets, potentially running over people. And we're not going to have any oversight. Absolutely not. Those governments are going to be wanting, hey, Waymo's put all this time, energy, studying, making their cars safe. Show me what you've done. And they can't say, oh, we thought about it and we're really smart. They have to show real life. Okay, show me that the car has driven the streets for years, and then I'll let you get the general public in one of those cars. So it's just going to take a long time. And that's where investors are going to be impatient. Investors will buy into an idea, but then they have to start seeing results. At some point, I think what is also going to be a risk factor for Tesla is that their CEO at times could be quite, say, really radical things, really upsetting things. And that could be a big risk factor for Tesla. So I think that, the whole story of robo-taxis, it's a story they want to tell because the company's doing so poorly. They're losing so much freaking money in the car business that they have to deflect the attention and say, hey guys, don't look at our revenue, lack of revenue growth. We're going to be a lot bigger when we're a robo-taxi company. We're a data company. It's like, well, maybe, but this is really poor compared to your competition, which is Goog. And we look at this stock, consistent growth. And this is much larger, much more profitable. We look at cash flow. This is a valuable company. $60 billion of cash versus 1.7. And they've been making big bets, one of them being the self-driving robo-taxi business. So overall, I just think, I always begin by saying, the stock price is not the company is not the stock price, two different things. And Tesla has built a really good EV business, but the stock price is nowhere near where it should be. Fair guy.
Hey, hi. I am not a Tesla investor, but I do hold stocks in Google. But quick question about the robotaxi. They have massive amounts of data that they use to drive use for their autopilot. So they do have real life data, right? The other thing is, what do you think about Tesla's battery business? Yeah.
Yeah. So good question. So two parts there, right? What do I think about the data that Tesla has since they have their cars so connected in their computers? I agree that they have a lot of data. But back to Waymo, I don't think anybody's going to argue with me that Google has a lot of data. Like Google Maps is, I think, the most popular mapping software that gives, lane by lane, turn by turn directions. And you can have all the data in the world, but did you design your car with the right camera setup? You see all the equipment on this car. You see the equipment on the roof there. All this equipment has to be designed, engineered, tested, and then you have to have a real life data set of the device, the machine, the car driving these streets. I like the images that Waymo puts out here because these cars are driving themselves, and there's people, there's children walking crosswalks, maybe even walking across the street very suddenly. Well, Tesla will have to prove that their car is going to be safe under those conditions. And they can't just say, we're really smart, we have a lot of data, trust us. No, government's going to be like, no. We've made Waymo test their cars for 10 years plus. We're going to make you test for a long period of time because we're not going to release a self-driving car, a robotaxi, and it's going to be a long process for them. And they have a huge competitor in Google who is not intending on operating robotaxis and so forth. They intend on selling the platform and technology to companies like Uber, and Uber would take over. And Uber has a lot of data, wouldn't you say? Then Uber, using the Waymo technology, can really go to town. In China, back to China, China has self-driving cars, and they're driving around different parts, different cities of China. That's going to be a competitor globally. In the US, it might be Tesla, Google, maybe a couple others. But globally, if China can prove that their cars are really safe, they could sell them to other parts of the world. So I think the buying into the Tesla story that involves robotaxis, it's just not adding up to me. They have really strong competitors that are ahead of them, substantially ahead of them. And I think they're going to have a hard time there. So you asked about robotaxi and you talked about data. I agree they have data, but they're not their competitors have lots of data too. It's not that Tesla has a monopoly on the data set. Nope. Waymo has data and they're connected to Google. Google has tons of data. And then you have Uber. Well, Uber's got tons of data. Talk about knowing what routes are most popular in the world. Who would know that better than Uber? Who would know the robo-taxi better than Uber? I'm an investor in Uber, by the way, and I believe that Uber has a future in robo-taxis. They're not going to create the robotaxi. They're not going to create the technology. They just have the right platform to then partner or buy the Waymo platform or whatever other platform is the best, and then collectively make lots of money by using this technology in their platform. So that's how I see it. So I think our friends at Tesla have really strong competitors that they're going to have to deal with. I don't see how they're going to have a clear path, kind of a completely fertile market for them to dominate. Nope. You got other competitors that are there that are actually ahead of you. So good question. What do you think, fair guy? I'm open to, if you see it a different way, please share it. And this is completely safe zone. That's how I see it, but I'm sure that I'm going to make mistakes along the way.
What do you think about the battery business? And the other question I want to follow up with the answer you gave. I mean, I'm not trying to argue anything, but this is just a conversation that we are having. So the follow-up question that I have about Tesla's data is, Tesla has tons of data. Even when compared to Google, their data set is much bigger because they have a fleet of nearly millions of cars on the road. And how do you compare them? And also, what do you think about their business of selling their data sets to train other companies' cars? I don't know if they're doing it now, but maybe in the future that's a prospective way.
It could be. Yeah, it could be. So I think there was a couple parts to that. Is first, so their cars have been driving around, everywhere, which I agree. Now, could they sell that data to other companies? Potentially. Yeah, potentially. But I just don't know on that piece. I don't know. I don't know how other companies would be buying that data set and depending on that data. And I think the other part of your question is the batteries, right? So I have solar panels on my home. We got them in 2022, and the solar panels are really, really advanced. It's great. We're generating all the power we need. We save like $150 a month or so. Now we looked into batteries. We looked at the Tesla battery set, and we could have bought what was at that time about a $7,000 to $10,000 battery to store power and then use it, right? Because you're kind of using it at night. It didn't make any financial sense because at night we don't use a lot of power. And second, at night the power company here where I live, the rates go down. They charge you very little at night. In the daytime is when they charge you a lot because that's when everybody else is awake and using power. So there's a lot more demand on their utilities. Now, the battery is going to help me at night when the power is really cheap and I don't use much of it because I'm asleep. And so the return on investment wasn't there. It was just like, it's not a very good, if it would have been $1,000, maybe $2,000, I would have bought it. But
Hey, sorry to interrupt. I was talking about the battery business for electric vehicles.
Okay. Yeah. So I think Tesla vehicles are probably the best designed, engineered cars, for EVs. I agree with that. That could be a business that they sell that component to other cars. Most definitely. Yeah, that could be a business. I don't know how big it would be, but that could definitely be a business.
Yep. I'm not an investor myself, but I'm just thinking out loud. Thanks for the discussion.
Yeah, I really appreciate you thinking of those things because, again, I'm making some pretty bold, comments on Tesla. I've recorded videos, by the way, and what I'm saying is in those videos. It's not like something I woke up 2 days ago and said, "Hey, I don't like Tesla anymore." And that's how I view it. We'll see where the stock goes. Obviously, the market at times has really agreed with my comments, and it's been a super volatile stock, man. I don't know where it's going to go from here. I'd be afraid to short it because, Elon Musk can wake up tomorrow and say, "Hey, I found the cure to cancer," and the stock will double in value, and people will actually believe it, and then it'll be like, "Oh my God, how can people believe that?" He's not even a life sciences scientist, but just as a completely make believe example, if he said something like that, the stock would really just rally.
Yeah, I agree. I don't hold any stocks myself. As I said, it's just a discussion, and I wanted to post my questions. Thanks.
Yeah, perfect. Thank you so much for doing so. So, we'll kind of wrap things up. I'm hoping tomorrow the stock market opens up to the positive, because it was not fun to see our investments, go through, declines. If we look at the S&P, the NASDAQ especially, it was not fun to see that volatility. Would I be surprised if the market trades lower? Not terribly surprised. Would I be surprised if it went down really fast again? I would be surprised at that. I think if we have some losses, they'll be modest. We may have some gains that are pretty good, because I think it feels a little bit like, okay, we had a pretty good correction. Now it's time for these stocks to maybe just, go to their fair value, maybe rise over momentum. We'll see what the market trades. If we have an upward, trending market this next week, I think we're done with the medicine that the market took, and we should have a good productive end of the year. But again, I would not be surprised if for the remainder of the year, it's just going to be modest. Maybe go up 2, 3, 4%, maybe go down 2, 3, 4%. I think that's what I'm expecting for the rest of the year, because there's no big story out there that's going to fuel the next, momentum. The AI story, that was last year's story, and it's beginning to lose its momentum, because investors are beginning to feel like, hey, show me ROI. Show me like how that AI business for, let's say, a company like 3M, they're an industrials company. They're not really using AI. Or how about a big company like Walmart? They're not really using AI in a very fundamental way. Like, oh, hey, we don't have employees anymore. We have a bunch of robots in the store. Yeah, they're not doing that. So these big businesses are not really touching AI. All the technology players, the Microsoft and Google and AWS, Amazon, Meta, yeah, they're betting big, because that could be the next big thing in their particular industry, or for their universe of that they operate in. But the mainstream economy, the AI is not doing anything yet. So that story is pretty much kind of faded. And I don't know that that's going to be the next catalyst to make the market go up. Probably the most interesting earnings call that I am looking forward to is NVIDIA. It's going to be August 28th. I have a short position on NVIDIA, and I'm going to close that position. I'm going to buy the shares and close out the position before August 28th, because I don't know what they're going to say. And they could say something like, the CEO there is very quickly becoming the celebrity CEO of the time. And he could say something that makes the stock go up 25, 50%. So I don't want to be in harm's way when that happens. So right now I'm making money on that short position on NVIDIA, because the stock has come down substantially. I'm going to get out of the way before the 28th of August and see what happens, and be a fan and see what happens. So that's what's happening. Everybody, thanks for tuning in to episode 4 of the podcast for the community. Thanks for being involved today, and thanks for all your comments. Thanks for watching the videos. Please continue to do so. If you haven't already, please join the Discord. It's really been active, and I think it's of value to everybody involved. And please give me feedback anytime. Just shoot me a comment. If you want it private, shoot me an email. Be glad to engage and talk it through. So with that, everybody, enjoy the rest of your Sunday, and thanks for tuning in.